Hello everyone, so you are welcome to my YouTube channel, and today we are officially launching our free mentorship program named From Zero to Skill Trader version 0 or episode 1.0. So when we talk about forex trading, what do we mean? So we are going to look at what forex trading means and then any other information that pertains to it. So forex trading is an exchange of foreign currencies on a global market where currencies are bought and sold. So unlike just like you go to the traditional market or black market to go and exchange your dollar for cedis, and then as well you can also go to the banks to go and exchange your currency for the other, the same way we do on a digital platform. Okay, so we don't do it physically, but we do it on a digital platform and then we make money from it. So simply, you are exchanging one currency for another with the aim of making profit from the price movement. So in the digital space, we pair two currencies together, and then when price goes to the upside or downside, we make money from it. So mostly you do hear people say that as for forex, when it goes up, that is when they make money, but when it comes down, they lose. No, in any other direction that price goes, you still make money from it. So as to whether price goes to the upside or goes to the downside, you can still make money from it. So for example, if you believe that USD will get stronger against the euro, then you buy USD and sell euro. So that is how it works. We always trade two currencies together. You can't trade one currency. So let's say you have USD at your hand, or you have Ghana cedi or any other currency, and you want to exchange for another currency. Definitely when a trade comes in, it means you are exchanging. So we trade two currencies at a time. So Forex is the largest financial market in the world, and then it's open 24 hours from Monday to Friday. We have other markets that is called the synthetic market. That one you can even trade it on weekends. And cryptos too, you can trade it on weekends. So that makes it 24/7. But when you want to trade currencies, it's only open from Monday to Friday. And then it actually opens on, if you are in Ghana, then the market opens from Sunday around 10 p.m. and then closes on Friday around same time, 10 p.m. So forex is traded by the banks, institutions, companies, and then individuals like us. Those days, it was only for the elite who can trade forex markets. The educated people like presidents and those ministers and big people, and as well business gurus who have a lot of money, and then the big banks, they were only allowed to trade the forex market. But today, the market has given us leverage. The market has come down to our level, and then individuals can also participate in trading the forex market and then as well make money from it. So now let's look at why people trade the forex market. So people trade the forex market to make extra income. Yes, of course, everybody is in to make money. Regardless of whatever job you are doing, you can still make money from the forex market. You can begin by making it a side hustle, and then later was you can make it your main business. So we all come inside the forex market, or we come to the forex industry to make money. So the next point is people come to the forex market to build a long-term financial freedom. Yes, so a lot of people who work at the government institutions may want to use this and then as a side hustle, building a long-term financial freedom. That is a skill you are going to acquire. So even when you go on pension, you can still trade the forex market. Unlike other businesses, when you go on pension, by that time, 60 years, you may be weak and you can't do active job. But this one, the only thing you need is your mobile phone, and then you can trade the forex market. So you can trade from anywhere, and this is the freedom that comes with it. A lot of people want freedom. You don't want to be under somebody. Why are you coming work by this time? Why are you late? And all those kind of things. You don't want any pressure. But with forex trading, you are your own boss. You determine when and where to trade. Even if you travel anywhere in the country, you can still trade, provided there is internet. You can trade. So today you can be in Ghana, tomorrow you can be in Nigeria, the next day you can be in UK, the next day you can be in France, and you can still trade, provided you have access to the internet. And then you can still trade with your phone or with your laptop. But then look at your profession you are doing now. If you're a teacher, or if you're a banker, or if you are a tailor, You can't go to any other location and continue with your work just like that. It's not going to be that feasible. But with forex trading, you have the skill in your mind, and then the only thing you need is your mobile phone and your money. So you can manage your money at any time you want, okay, without no pressure. Sometimes you can even wake up and decide not to trade for the whole day, for the whole week, for the whole month, and then nobody cares about that because you are managing your own finance. You are your own boss. So there is the kind of freedom that comes with forex trading, and then this is why people are chasing this particular skill. So others do trade. You can also trade the forex market with a small capital and grow gradually. Unlike other businesses, you need huge capital to start. But forex trading, once you have the required skill, you can start with any small amount, like $50, $1,000, and then you can grow it gradually. Looking at other professions, let's say you even want to open a provision store. In Ghana here, if you want to rent a nice shop, you would get it around 50,000 Ghana cedis. That is 500 million. And then just that alone, that is about $5,000 or $4,500 currently. And then you will have to now go and finish. You have to finish the shop, and then as well go get your materials or the things you would want to sell in that shop. By the time you finish, you'll be around 100,000 Ghana cedis and then above. That is about $10,000, of which makes it very difficult to start up such businesses. But with forex trading, you can start as low as $100, $200, $300, $400, $500, depending on your capital and then your strength. So forex trading, a lot of people say that forex trading is gambling. No, forex trading is not gambling. It is a skill you are going to acquire. And then people do compare forex trading to that of betting. Betting is purely 100% gambling. Forex is not gambling. You only gamble in a forex market when you have no idea about what you are doing. That means you come to the market, you just click sell without having any prerequisite knowledge about what you are doing. For that case, we will say you are gambling because you don't know what you are doing. You are just throwing in your money. But if you learn the data that the forex markets provide, then you are having a full skill and then you are not gambling. So forex is a skill that you must learn. 2026, it is one of the best skills you can learn. So let's look at how forex works. So we trade currencies. The currencies are being traded in pairs. Like I said earlier, we pair these currencies, one country currency to the other, and then we trade them. So looking at the examples over here, we have Euro USD, we have GBP USD, we have USD JPY. They are all different currencies being paired together. So each pair has a base currency, that is the fair currency. So you see Euro, EUR, that is Euro. And then we have United States dollar, we have Great British Pound, and then we have USD. We have USD and then Japanese yen. So the fair pair is the base currency, and then the second one is the quote currency. So most of the time, the pair you want to trade is the fair pair, is the base currency. So for example, if you look at Euro USD, let's say the price at 1.100, and you want to buy Euro USD, it means you are buying Euro USD and then you are selling USD. Okay, so if price goes up, you profit. Okay, and if price goes down, you lose because you wanted to buy. But at the same time with Euro USD, let's say you want to sell. Now if you sell Euro USD and price goes down, you make money because you wanted to sell. And if price doesn't sell but then goes up, you lose. But the beautiful thing over here is that you don't lose your entire money, just like bet. For somebody to bet his money on a match like 1,000 cedis, the moment the bet or the moment the matches start, the account freezes. You can't do anything about the bet you have placed. But with forex trading, since it's not gambling and you have to manage risks, when you place a trade and the trade is moving in a direction you don't want, let's say you want to buy USD at the price of 1,000, and I've realized that price is not buying, but then it is rather selling. Quickly, you can close your trade at a small loss to protect your capital from losing everything. So we have a parameter called stop loss. That is a risk management tool that we use to protect your trade. Anytime you pick a trade, it's a defense mechanism. you use it to protect your trade from losing so much, right? So now let's move to the next one. So in forex trading, we have only two actions. We either buy or we sell. So when we buy, we say we are going long, or we are longing, or we are bearish. Sorry, we are bullish. Buy, long, bullish, it means the same thing. So when you buy, we expect price to go to the upside. Now the second action is sell. So when you sell, you say we are shorting, or we are going bearish, or the market is bearish. It means that the market is going down. That is where you hear people say that when the market is going down, it means they are losing their money. No. When the market goes down, you don't lose your money. You can still make money when the market goes down, and you can make money when the market is going up. It is your speculation to determine if you want to buy or you want to sell, depending on the data you have read. Over here, we read data, we learn. Unlike a bird institution where you don't have to learn so much about the previous data. Over here, you have to learn so much about the previous data, previous performance of the currencies you want to trade. You have to learn the economic activities of those countries, and then you get to know how they are performing before you even trade them. So you don't need to own the currency physically. You don't need to own a currency physically, like going to the bank to go and exchange dollar. No. Over here, we do everything digitally. All you have to do is to deposit your money in your brokerage account, and then you manage it. Nobody manages for you. You do it on your own. So you only trade from the price movement. If price is going to the outside, you make profit from it. If it's going down, you can as well make profit from it. Now let's look at the next point. What moves the forex market? What moves the forex market is one of the questions most people do ask me. So the chart you are seeing on the screen, or the picture you are seeing on the screen, we call it chart. Those lines you are seeing, we call it candlesticks. You can see green and then some black or ash candlesticks. For the colors, you can determine, you can choose any color you want. So this is my preferred color. So the green candles means that price is going up, and then the ash candles means that price is coming down. So now let's get back to what moves the forex market. So forex prices moves because of one, technical analysis. Just like what you are seeing on the chart, you see there are so many lines that have drawn something on the chart. That is what we call technical analysis. You studying the chart using the previous data to determine the next movement of price. That is what we call technical analysis. So more buyers means that price will rise to the upside, and then when you see that price is going to the downside, it means that we have more sellers in the market. Now the second thing is news or fundamental analysis. This one will have to do with the economic activities of that or a particular country. So currently in Ghana, we are seeing that the gold board is performing very well, and then that is helping the currency to stabilize. So in any other country, we have different economic activities. We have NFP, we have FOMC, we have CPI, and we have a lot. So all these economic activities influences the movement of price in the forex market. So we have interest rates, inflation, employment data, central bank decision, and this one cut across every country. Every country has interest rates, inflation, employment data, and central bank decisions. So this also affects the forex market. It causes price to either move rapidly to the upside or to the downside. And as we continue on the lessons, we are going to dive deeper into each of these sections, and then you understand them perfectly. The third one is market sentiment or sentimental analysis. Most of the time, how traders feel about a currency will also move that particular currency. Why? Because if price gets to a certain stage and all traders are speculating that, where price has gotten to, we expect that price should sell. And then we have a lot of traders having the same sentiment, feeling that price should sell. Because we are all having the same feeling, we all begin to sell, and then gradually or eventually we see that price will definitely sell. So that is what we mean by market sentiment. Now let's look at what we call time frames. We have different time frames on the chart. When you look on the right side of the screen, you can see I have added some two screenshots. One is on the H1 and the second one is M30. So we have different time frames starting from M1, it means 1 minute, and 15 minutes, H1 1 hour, H4 4 hours daily. We have M30. I forgot to add it, but it's on the MT4 or even trading view. We have weekly, WMN, that means monthly. Now what this means is that when you select any of the time frames on your chart, it means that that time frame represents one candlestick, or it took that time frame to form one candlestick. So when you select the daily time frame, it means that it took the whole day to form a daily candlestick, or to form just one candlestick. Now what happens when you switch to the lower time frame inside the daily candlestick, like that of 1 hour, you realize that in daily candlestick, or in the whole day, how many 1 hour do we have in daily? We have 24 hours in it. So when you select one daily candlestick and you expand it, you realize that you have 24 candlesticks in it, right? So you dive more into it and then you understand what I mean perfectly. So now the next thing we have is top and down analysis. Okay, this is the key foundation of every strategy you will learn in the forex market. So this is how professional traders analyze the market. So it starts from the higher time frame, that's the daily, weekly, monthly, and then you come down. The lowest time frame starts from 30, 15 minutes, 5 minutes, and then downwards. So you first identify the trend, you mark key areas, then you move to the lower time frames to find your entry. I know what I'm saying you may not, and then that is perfectly fine. I'm just giving you an introduction to forex trading. So you dive more to it and then you understand that better. So now let's look at this one too as well. We have basic forex terms every beginner must know. So we have what we call pips, is the movement of price, okay, or the change in price movement. Now I've added a screenshot here again. When you look at the right side of it, you can see some numbers 5.0 starting from the very top, 155.190, 155.20 downwards. So these are the price movements, and as price move to any price, and as price move from one level to the other, that is where you make money from the differences. So you can see some two lines on the screen. That is where price has gotten to currently, and if price move from that 1.5454.780 to last figure 155.0, it means you make money. That is if you bought the market. So we have what we call lot size. That is the volume you use to trade, the amount of money you want to risk per trade. And we have what we call spread. Spread is the difference between ask price and then the bid price. So we have two prices, one we used to buy, one we used to sell. So the difference between them is what we call the spread, and that is what the broker charges you as a fee. We have leverage. Leverage is the borrowed capital that the broker gives you in addition to your trade, in addition to your capital, and that allows you to trade or have access to the financial market. Now we have margin, the required capital to open a trade, that is also provided by the broker. And we have stop loss, where you accept a loss. Okay, so stop loss, I said earlier, is a defense mechanism or a parameter that helps or protects your trade from losing. Okay, and then we have take profits. It's also a parameter that also takes your profits for you when you are not even by the chart. So you can just pick a trade, close your phone, or even switch off your phone. The trade will still run, provided you have set your take profit and your stop loss. If price reaches there, it will close your trade for you in either loss or profits. So you don't always have to be looking at your chart or looking at the screen all the time. So don't worry, we will explain most of this, like I keep on saying, as we move on. So now let's look at a common forex trading concept. Now there are a lot of concepts in the forex market. There are so many concepts in the forex market that people use to trade. So the first one is what we call price action. Price action is the reading of price using candlesticks, trends, chart patterns, key levels, and then reversal chart patterns. So it's the foundation of all trading. And now we have other ones. But before I even move to the other ones, if you learn the forex market without learning price action, without learning this, jump and go and learn SMC, you'll be limited to just that concept. But if you have an idea of price action, and you are trading SMC or ICT, you have a broader knowledge and a broader perspective of the market. Unlike somebody who just jump to go and learn in the middle. It's just like you starting schooling and then you don't go to a primary, you don't go to GHS, but you jump straight away and you go to SHS. How are you going to feel? How is the learning process going to be for you? You will quit because everything is going to be very difficult for you. Everything will be difficult for you. So a lot of people come to the forex market, they lose so much money, they give up, they don't continue trading again because they jump some of the steps. You don't have to jump steps. Okay, so this concept is what I'm going to teach you people for free. A lot of people are using this concept and they are making money from it. I don't use this one alone, I use other ones in addition. But then as a beginner, you can't add any other to price action until you complete price action and fully understand it. So the next concept is SMC, or we call smart money concept. So understanding this by how the institutions move, you focus on market structure, liquidity, order blocks, demand and supply, and all those things. And this one is also a beginner friendly. So before you come to this, you have to complete price action trading, or before you even come to SMC. Now the next one is ICT. This one, it is not for beginners. It's very, very difficult. It's not for beginners at all. So before you even come to ICT, you should learn price action, SMC, before ICT. Okay, but if you learn SMC, you even need to learn ICT because most of the things are from ICT. It's just a revised version of ICT. And then we have indicator-based trading. Indicators like RSI, moving average. There are thousands of indicators that people use to trade upon meeting certain criteria. They will say if this indicator does this, reach this level, a whole lot of stories, but then they don't work. I have used indicators for years and I can tell you that they don't work. So as a beginner coming to the forex market, don't even focus on indicator. When you hear anything indicator, just run away from it. You are going to learn the raw price action, that is the candlesticks, what they mean. Because the candlesticks print everything. It tells you a story of how the market is moving. The last strategy is MSNR, okay, Malaysian support and resistance. It is an advanced version of price action. It is an advanced version of SMC. So you can see that all these strategies are combined and then they are inside Malaysian SNR. So we have, it comprises of price action, SMC, and then other strategies that are all combined. And that is what I use currently. But you cannot just jump and come to this strategy. You have to pass through these strategies before you come here. So I'm going to teach you this price action for free. And then if you want to subscribe to any of these strategies, I'll just give you a discount, a low cost, like just a commitment fee. So I'll take you through or provide you with the materials and guide you to become expert in any of these strategies. My view or my concept is that you get the approach to most of these concepts so that you will know which one will best suit your trading style. You know which one will work best for you. Okay. Somebody may just stick to price action alone and he or she may perform so better with it. Somebody too may come to even my strategy, the MNSNR, and then he may not do well with it. He may do better with SMC. Then I want you all to just have a brief idea of how these strategies work, and then you choose one concept and master yourself in that field and use it very well. So continuation, we have harmonic patterns, we have chart patterns. Chart patterns are part of the price action. Candlestick patterns are part of price action. Demand and supply is part of SMC. Fibonacci trading is part of SMC, and then price action. So you see, price action is packed the whole lot into price action. So when you learn price action, you should be a good trader at all costs. So some common forex trading strategies. Aside the concept, we have different strategies like scalping, we have day trading, we have swing trading, we have position trading. So for scalping, when somebody wants to trade on a let me put it this way. For scalping, you would want to just come to the market, trade for some few minutes and then exit without staying in the market for long. So some people who are very busy may want to take advantage of this. They are very busy, so the least time they get, maybe they have a break time for, let's say, 1 hour. So within the 1 hour, they just jump into the market, and then when they find opportunity, they trade within 30 minutes, they are done. Scalping could also be for people who have enough time, because they are sitting by the screen, they can just take opportunities in the market. Every opportunity, they can just capitalize on it. And then it is not for beginners too as well. So we have what we call day trading or intraday trading. So this type of trading, you have to open your trade in the morning and close it in the evening or even the same day. Mostly you have to use the 15 minutes to 1 hour to do such trading, and we call it day trading. They pick trade in the morning, in the mid-afternoon or evening they close the trade. That's day trading, and it's for who have enough time. If you're a student, you can do day trading. If you are working and then it is not that you are not so busy at work, you can still do day trading. We have swing traders. This one too is beginner friendly. So this one, you open a trade, you hold it for days, weeks, or even months. Okay, so if you hold trade for a very long time, over day, 2 days, 3 days, we call you a swing trader. And this one is best for everyone. If you are very busy at work, let's say you are working, you have another job, and you still want to trade, this style is for you. So you basically have to use the higher time frames to do your analysis. And with this one, you open a trade, let's say on Monday or Tuesday, you can hold a trade for a very long time, like a day, 2 days, 3 days, or weeks, without stressing so much on it. So this one is less stressful in trading, unlike the day trading where you would have to be checking your screen all the time. So this one, you don't have to be checking your screen all the time. And the next one is position trading. With position trading, you pick a trade and you close it in months, like 3 months, 4 months, 5 months, or even a year. This one is position, that's called position trading. That one is also less stressful. So these ones are some of the trading strategies. They are all these ones are part of price action aside the indicator-based trading. So now we have forms of market movement. We have trending market, we have ranging, consolidation, or choppy. Most of the time, they all look the same way. Most of the time, they almost look the same way. So what we do is that what the market does is that it has a trending market. We have trending markets and we have ranging markets, like I explained, like I said earlier. So with trending markets, the market is either moving to the upside or it is moving to the downside, right? So if the market is moving to the downside, we say the market is bearish. If the market is moving to the upside, we say the market is bullish or in an uptrend. So we say the market is your friend. So you only trade when the market is trending. That is where you jump in and then you make money. The next one is called ranging market. Ranging market is also good to trade. The market doesn't move in any direction. It doesn't go to the upside. It doesn't go to the downside. It keeps ranging like that. It keeps going on a sideways. So in that regard, we say the market is ranging. It doesn't give a clear direction at which it is going. We see price moving in one particular place. And you have consolidating and choppy. Price pauses after a strong move. So most of the time it happens after a breakout and it doesn't give a clear direction, just like the choppy. It stands still, just like the ranging too. But the ranging gives you a bit space to see where it is going, unlike that of the choppy and the consolidation. Unlike the consolidation. So we have brokers. So brokers are intermediaries between we and then the financial institution. So a forex broker is a company that connects you to the forex market, providing you with a trading platform like that of MT4 or MT5. And it allows you to do your buy and sell. You cannot trade the forex market without a broker. So a broker is just like, let's say in Ghana, you see we have Bank of Ghana, we have commercial banks, and then Fidelity and all those things. But for Bank of Ghana, an individual cannot go to Bank of Ghana to open an account. But you can open your account at any of the third-party banks. The third-party banks or intermediary banks are the Commercial Bank, Fidelity Bank, Access Bank. So in the forex market, you cannot just go to the big institutions to go and open accounts. You have to get a broker, that is an intermediary, to open an account with. The same way some people don't feel okay with some banks with their customer service and then withdrawals and deposit issues. The same way the brokers too, we have brokers which are good, some are not regulated, some have withdrawal issues. The same way with the banks. So I'm going to give you a correct and then a verified broker, a regulated broker we are all going to use for the purpose of this mentorship. I'll give you the broker and then you all register and you trade with it. So we have what we call risk management. That is the most important thing in the forex market. So even though you are coming to the forex market to make money, you can still lose money. And risk management is that helps you not to lose your entire capital. So you don't have to risk what you can't afford to lose. Okay, if you are okay losing $100, you deposit it and then you trade with it. But if you are not okay risking $100, don't deposit $100. Deposit something you feel like this money, if you lose it, you are okay. You are not going to be worried. You are not going to be bothered. That is how you trade the forex market. And then you always have to use a stop loss to protect your account. I've explained that earlier. You always have to deposit something small and grow with it gradually. So one good trade is better than so many bad trades. So trading is about survival and then profit will come later. So you have to protect your account as much as you can and then profit will come later. So the next one, forex is a skill. It's not a shortcut. You don't have to rush it and then you don't have to gamble. And then it is not a gamble. Let me put it this way. And you have to learn it step by step. You have to learn it step by step, just like I explained earlier. You don't have to jump. Having come into this industry, you will see a lot of videos online. I will urge you that you have to come and verify any source of information you find on the internet from me before you even use it, because people come to the industry just 2-3 months and they begin to make content out there. They have no knowledge about what they are doing. I have been in the forex markets for more than 5 years now, so whatever information I give to you, I know that it's going to help you. And I'm seeing a lot of information, bad content out there that may not help you. You may see a lot of influencers shifting their content to forex trading. They have no idea about what they are doing. Probably they are in the forex market less than a year and they are putting content out there. If you are not taking some of this content, you get feed on will make you stop your trading career very quick, because you pick those information, you lose money 1 or 2, and then you feel like forex trading is not for you. You have to give up. But forex trading is for everybody. It is not for genius. You don't have to be a rocket science. You don't have to be a mathematician. You don't have to be so much academia before you can trade the forex market. The only thing you need is the ability to read and following simple instructions. When I came to the forex market, there were no information on the social media. So when you go to YouTube, you're not going to find any information out there. But today, there are thousands of information out there. And then there are so many charts. So if you go and pick any information you begin to use, it may be at your own risk. So make sure you verify every information. So make sure you verify every information you find out there from me before you even use it. Better still, you can just stay to whatever I'm going to teach you. Stick to it and then just go by whatever instructions I give you. Forex trading, you have to be very disciplined to rules that we set for you, and then you will also set for yourself. If you follow those things, it's going to be a shortcut for you. Unlike some of us who started so many years ago, we didn't have anybody to teach us, we didn't have anybody to correct us. Don't do this, don't do that. We fought it through. We fought it through by getting the experience. Through that, we lost so much money. But if you are here, you are fortunate that a seasoned trader, a professional trader, is going to teach you the very things to do and what not to do. But if you don't follow them, then you may end up losing so much money, which may even end up your trading career. So make sure you stick to this channel then. So let's come to my mentorship activities. This is my mentorship program for beginners that I charge $100, but I'm teaching you people for free, so you have to take it very serious. This course is not for free, but I'm teaching you people for free. That is price action. This is an industry that you have come in to make life-changing opportunity, to change a whole lot of things around, to make a living out of it. So I expect that you get everything for free. You pay school fees, you went to school for 4 years, came back home and you still don't have a job. Most people encountering this. But with this one, you pay something less and then right after it, you become your own boss. You have that freedom to make a good living out of it. So you do have to pay to learn. There are a lot of people even charging more than I'm charging, but I'm going to charge you people very less. So for this particular one, it's for free. When you finish learning this one, then you come to the advanced strategies. So we have the intermediate forex trading mentorship, that is $200, and then the strategy I use right now is the 350. But I'm not going to charge any of you this amount. I'm going to give it to you at a very low price. For the intermediate one, I'm going to give it to you very less. The same thing applies to that of the Pro Master Trader. So if you finish the price action, then you come to this one, I'll give it to you very low because I want you all to succeed. One day, if you stand somewhere and say, God bless anointing, I'll be very happy. More than the money I'm going to charge you here. And don't run away because of this money. When I see you are even performing very well in the price action strategy, I may even give this strategy for you for free. And then if you are also on this platform and then you are already a trader, but then you are not consistent, you are not making money, you are still not making money as you want, then I recommend that you skip the beginner class, DM me, and then we can negotiate on any of these prices. I'll give you the strategies and then I'll teach you the very best way I can so that you can also make something good for yourself. So you make sure you stay tuned. And then the last one, if you want all this concept, you want to skip everything, you want to deal with me one-on-one, but then not the group studies, you can come to me $500. But then how many of you can pay $500? It's not easy. That is 5,000 Ghana cedis now. And then I cannot charge any of you 5,000 Ghana cedis, okay? So if you want any of this, let's say you have the money, you can come to me. I'll just give it to you at a very, very, very low price. And then you can also start learning. And when you subscribe to mentorship, one-on-one mentorship, the pace at which you are going to learn is going to be very fast than that of the free one, because the free one it's not going to be like somebody who has paid. The attention isn't going to be the same. But then still, I'm going to be with you for the price action. I'll make sure you complete that course perfectly, that everybody will be able to stand that skill with the price action. So you all, thank you for being here, and I wish you all the best in your trading journey. See you. Make sure you subscribe to this channel because I'll be dropping more videos. So make sure you subscribe this channel, you like this video, and then if possibly you can leave a comment. That is going to be fine. So see you all in my next video.